Hello and welcome to another episode of Stock Shots. Please remember, I am not a financial advisor. I'm just giving my opinion based on some things I see, like support and resistance, supply, demand, and of course, some indicators that may be on the screen. So always do your own due diligence. Make sure you educate yourself and always look to the left because we're looking at things that have already happened and think about what things may do in the future. So this is another episode of Stock Shots. Welcome. All right, welcome back to another episode of Stock Shots. And of course, we are looking at our favorite, the TSP funds, and we're starting out with the SPX, aka the C fund. Now, on the C fund, if you notice, you are starting a pattern here. If you haven't noticed it, look here at your base. We got to our top, we pulled back a little bit, we got to another top. I'm looking forward to do one of these to come back down. So the reason I'm looking forward to come back down, this would complete an M pattern. And usually M patterns are really, really good and reliable. So this is a double touch right here on this area. So here to here were two touches. These two touches signify that price action tried to break this resistance area and failed twice. So next thing I'm looking at for confirmation on that, on my thoughts only, not yours, do your own due diligence, is here on this candle right there. Let's use one of these. So on this candle right here, I see that, and that's pointing to the smaller one there. Excuse me. That's pointing to a pretty good high here in the strength of SPX. But if I look to the next candle that is slightly higher, and this is when we try to break that same resistance area, the strength of the market is coming out. So I'm not sure if this is going to be a pullback to here and then a continuation up, or is this going to be a pullback to this area, which would be about the 4608. So I'm looking to see if that's going to be what happens, but based on the pattern I'm seeing here, which is an M pattern, it looks like this is probably going to be one of those pullbacks to a greater pull forward. So let's go to our next one. We're going to talk about the aggregated bond fund, aka F fund. So the F fund is right here. So we're looking at this and we're going to see this is kind of giving us the same thing. So it's not as neat as we saw on SPX. So we see this, we see this, we see this. Are we going to see this coming up? Is that going to be the pattern we're going to see? I'm not sure. I'm not going to lie to you. This one looks as though if the interest rates, and this is important, with the F fund, you have to take into account the interest rates bear a very big determining factor on this. If interest rates go down, bonds are most likely going to go down as well. But if the bonds go down, that means money's probably going to flow into the stock market. So this is one of the things you have to actually look at and say, hey, if I'm playing the bond market, am I going to be looking for a pullback or a straight fall down? All right, let's go to the next one. Our next one is going to be, of course, our favorite Dow Jones Industrial. Here we go. Now with the Dow Jones, let's get this out of the way here. There we go. With the Dow Jones, we got a little bit of the same pattern, but this one looks like it is not as clear. So remember we had the M pattern in the last two. This one does not look like a straight M pattern. It looks like it has a it's messing around here. Would that end up coming down here? So what I want to do is I want to do some more charting. I want to make sure that I see everything I'm supposed to be seeing. So first and foremost, what I'm going to do is I'm going to put a box over here. And so you may be asking why I put a box here. Well, the reason I'm doing it is I'm marking out a zone here to here. So this zone is specifically going to be for a demand. Now, if price action comes here and then has a strong reaction off of this, meaning we are here, we're looking to come to here, but we really want to see the reaction off of it. Will that push it higher to here? So for the Dow Jones, aka the S fund, I'm looking for a reaction off of this demand zone here in the daily. So if you notice, I've been showing a lot of dailies today because recently we're getting to a point where a lot of the market is getting very, very high and it needs to have some pullback. So this week we're talking about the dailies. I'll go through them again in the weekly so you can get a better view as well. But let's get through this last one. Let's go through the international fund. So the international fund, the EFA, and that is going to be I fund. Here we go. Now we've been playing around in this area, consolidating for a while now. We haven't gotten anything other than this one candle here. So we have a candle right here in the daily time frames that is showing strong rejection right there. Now, is that going to be a follow through to continue up into this area here? We're going to see. So now that we looked at all of these in the daily, let's go to the international fund and the weekly. If you notice, we are now looking at this, and it is a green candle in the week. All right, so we have a green candle here in the week. That is a good thing. This is going to most likely push up towards our next area, which is $76.32. So from here to here, that's what I'm looking for. Now, this does not mean that we can't get a pullback. I want you to pay attention to this candle right here. This candle is a great candle to look at, this long green candle, but it does give me concern at times as well. If you have been in the stock market or investing for a while, you may figure out why I'm concerned about that candle, but look up institutional candles. So let's go back to the Dow Jones in the weekly. Now, in the weekly, we had a pullback. Remember, we had about 8 weeks up, or 1, 2, 3, 4, 5, 6, 7. We had 7 green candles in a row, and on this one red candle. So now we have 2 weeks in a row where we have red, and then this one where we have another green. The one reason I'm liking this candle to go up in the weekly is because if you notice here at this area, these two candles are not that different where this one ended and then this one started. So this could be a very good indicator that we are going up. And when I'm looking at my indicator here at the bottom, it looks like we're bouncing a little bit off of that moving average. We haven't gotten it there, but it looks like we are going to move up, and that means going to the 2017 area. So let's go back to that aggregated bond fund and the weekly. So now we're in the weekly time frame. All right, this is a little bit clearer. It looks like we do have a slight pullback and then a continuation. This one also has a candle that ended here, but then the next candle started here. Pretty close, meaning there's a lot of bullish momentum there. And I do see we are moving upwards, and we are in a pretty good buy zone. So that means I'm looking forward to it to get to that $100 mark for the aggregated bond fund, and that's the F fund. But now let's go back to SPX and the weekly. So the reason I'm doing it differently this week because I see a lot of things in the market that make it seem like we could be topping. So this week we are looking at this right here, this green candle. This green candle is pushing us up towards our next area, which is that 48.13. It was a very bullish candle. It didn't close below this candle. It closed very high above this red candle, this bearish candle. It opened above the close of this same candle. So this is good things. These are very good things. I would love to see this momentum go forward into the following week. That will definitely give us that 48.13. And if you can't figure out where it's going to go after that, always think of round numbers. That helps us get our good entries and exits. The stock market loves round numbers. So that is our breakdown of the TSP funds on stock shots for this week. Thanks a lot, and we'll see you next weekend.